Welcome to Office Hours, and I'm delighted to have Melissa Johnston with me. Hey, Melissa.
Hello, happy to be here, Dave. Thanks for having me.
Yeah. John is actually at a conference in Chicago this week, so it's just you and I. That usually means that both of us will have more time to actually say things because John won't be interrupting us nonstop. And I know he's going to be watching this, so he'll get a giggle out of that.
Love it.
But we're so delighted to have you here. And for everyone that's attending today and watching afterwards, the reason we're excited to have Melissa with us is that she just started a brand new bank. So Melissa's co-founder of EntreBank and the chief credit officer and executive vice president. So she grew up on a farm in southern Minnesota, earned her math degree from SDSU and an MBA from Carlson at the U. She oversees credit and risk management along with bringing in and serving the bank's clients. She's fantastic, amazing. I've had a bunch of great chats with Melissa, and I'm so excited to talk about the world of financing and banking and really entrepreneurship. So
Yeah.
Melissa, welcome.
Thank you. Yes, I'm excited too. I feel like I'm genetically encoded to be a banker. So this just lights up my life to be able to talk about banking and finance and how it impacts small businesses.
So cool. So cool. Well, welcome and so glad to have you here. As we get going, and again, Office Hours is kind of a joint partnership between Voyager U, which handles and trains and is a networking group for fractional executives, and BusyWeb, which is a manufacturing and B2B services growth agency for folks that are looking to grow and scale. And a big part of that is financing and just having money. So I guess my first question for you, Melissa, is, what are the biggest questions that you see or that you ask when someone comes to you with a need and wants to, just find you as a bank?
Yeah, so there's a couple different ways to answer that question. My process when someone comes to me and asks for financing is I always like to take a step back and learn a little bit about the business, what the background is of the company, and then really talk to the owner, controller, whoever is in charge of the financing piece about what the goals are for the company, and just having them sort of walk me through what they're trying to get at and why. Because oftentimes I've found that when folks come to me with a financing need, they sometimes have generalizations or have talked to someone else about what type of loan they may need. But then when I do a little bit deeper dive and uncover a few stones, I can oftentimes find out that maybe what they were thinking in terms of a loan need or a structure, there may be a better option for them.
Sure.
So I always just like to do a deep dive into that piece. As far as what banks look for, there's a lot of the training that the credit and underwriting teams have grown up with is what's called the 5 C's of credit. So it's character, capacity, collateral, capital, and conditions. And believe it or not, the number one most important item of a business loan for a banker is the character of the borrower. So they want to see, does this individual or the people that are standing behind this loan, do they have high integrity? Can they be trusted? Do they have what appears to be good business acumen to be able to run their business? And it could be where a company that has had a few ups and downs and cash flow challenges, but is run by someone that has a really good character, is able to get a loan versus a company that maybe their financials look good, but a banker meets with them and just does not feel good about the owner or the person that is going to be standing behind the company. They just get really bad vibes. There's times where that banker may say no to the second option and go with the person that they feel really good about, the ability and the willingness that they have to repay the loan. So it is fascinating, the character part that comes into play. And then the other most important aspect is really the cash flow. And that's looking at historical cash flow and also looking at what the projections, what the budget is. And and if that's believable. Sometimes we get a pro forma that is looks like they're going to knock it out of the park, but when it comes down to what are the factors that are contributing to that budget, and asking questions, really trying to sensitize what they're coming up with, allows for that type of discussion to understand. And I would say the other thing that's unique about the small business world is obviously the world of startups. And so when a banker doesn't have historical financial statements to go off of, the budget becomes even more important. And then bankers will often look at the industry in general and try to get a feel for, what the industry is doing in that particular field, and make generalizations and do some analysis that way.
Cool. Amazing. So on the character part in particular, I think, are there questions that you like to ask, or is there, how do you get to that gut feel for that person or for that business?
The gut feel that I get is really going out and meeting the owner, and I say the owner or whoever's in charge of it. Sometimes the CFO or the controller will really be more involved, but oftentimes in my world it's the owner. And so going out to the office, taking a tour, getting a feel for how they treat their employees, their suppliers, their clients, and we do some Google searching and some background checking that way. Depending on the amount of the loan, if it's a couple million and we're not familiar with the borrower, we may actually do a more formal background check.
Sure.
But it's really just going out and seeing the operation and getting a feel for how they interact and that sort of thing. I don't know if I've ever done a loan for anyone on the business side that I've never met. Right. That's just not how I do business. Yeah.
Of course. Well,
and I think that's, there's online banks who never meet their clients, and then large banks also. But I think in the community banking world, which is where I've spent my entire life, that is common, where we as bankers, it's really important to us to meet the folks we're doing business with.
Yeah, absolutely. Well, and I think that just kind of speaks to the kind of bank that you're running, right? I mean, EntreBank is all about personal relationships and helping people scale and grow. Trigvi actually just asked us, chatted in a question that I think is probably elemental as we talk about what our audience is looking for. He asks, is it better to start with a loan or to bootstrap and then get a loan for growth once you're ready?
Yes. And hi, Trigvi. That's a great question. And there really isn't a right or wrong answer in that. And the issue, so I feel like as a startup, all the stats out there say that the number one reason startups fail is due to lack of capital. Is that also because they're potentially not run well? Maybe. So I feel like as a startup, if you can get a good financial partner, of course I'm biased, that is the best way to go.
Right.
What happens in a startup is if they try to bootstrap for various reasons and they fall behind on their plan or projections, or show on paper that they quote need money, it's more difficult, especially in that startup phase up to 3 years in business, to get money once you're operating. Because if you show that you're losing money and you weren't thoughtful about your capitalization plan and having a good partner in place from the beginning, banks sort of go in with a little bit of a bias saying that, well, you haven't really proven that you can be prepared and planful about how to operate your business. And especially if you're showing a loss, it's really difficult to get money after you've opened, and it can be really economical to bootstrap. But if you're going to try to get financing before you're profitable, it's almost impossible. But if you can get a good so ideally for a startup, if you can get that good financial partner as a startup where you say, I am planning to lose money for whatever it is, 6
Right.
months, 12 months, 18
Yeah.
months, which can happen in a variety of different industries.
Mhm.
But you build in that cushion. You say, here's the money I'm bringing to the table, whatever else may fill the gap, investors or so forth,
Mhm.
suppliers, and then here's the amount of financing I need, and it's clear what your plan is, and when you're going to turn that profitability, the bank can really be a good partner for you through
Mhm.
that process.
Mhm.
And then of course updating your plan as things go, because out of the 20 plus years I've been in banking, I think I've had a client meet its pro forma twice out of hundreds of different startups. So
Mhm. Wow, fascinating. And I had never really even thought of that, because I always thought maybe I needed to prove that I had skin in the game and to kind of bootstrap it along. But yeah, if you're already operating at a loss, you're like, well, is this a thing? Instead of hearing that you planned for it and putting it together. So maybe coming in and saying, I want a partner to grow this business right from square one is an entirely different conversation than coming to the bank with a need because you're struggling.
you ran out of money.
Yeah.
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 No,
Wow.
exactly.
Mhm. Wow. Okay. Fantastic. Okay. So I want to ask like one more question before we open up the lines, because I've got a few other chats in here, and welcome to Molly, and of course to Carl as well. Trig, thanks for asking questions here. When you're looking to start a relationship with a new partner, other than the 5 C's, what are you really looking for? Like what's a great partner, or what's a great business that you would love to see more of, and that you would hope to receive 5 more calls from this month?
Oh, well, that feels a little self-serving to answer.
That's okay. That's okay.
Well, yeah, I mean, geez, if I got to pick who to do business with, we love manufacturers. When folks are building something, they have products, they need equipment loans, they may need a building, they have cash management where we can be their provider on the banking deposit accounts and cash management services that they may need to manage their account, fraud identification tools, that sort of thing. Those are ideal. We've only been open a couple months now, but we've already had a full range of all different types of businesses applying for loans that we feel just so good about helping. And they're in service businesses, distribution, manufacturing, investors that are looking to buy real estate and different things. And so we really don't, some banks may focus on certain niches. We're really open to who we do business with and have conversations with, and have really embraced a number of different types of referrals.
Okay. Amazing. Okay. Perfect. We've got some other really interesting questions in here. So if you're evaluating a service provider, how do you evaluate collateral inside of that? Like how do you make sure that they have their skin in the game?
Sure. Yeah. So service providers, if they're applying for a loan, it can be difficult for them to have any sort of collateral available. And so options are available to banks to mitigate the risk from the bank standpoint. Sometimes banks will look at the SBA, the Small Business Administration. Yep. And those loans can make it easier for service-based businesses to get the funding they need. Other times the bank may look for more personal guarantees. So depends on kind of the ownership structure, but if there's folks that are willing to personally guarantee the loan that can support the loan, banks can get comfortable with service providers. It's not, at least at Entrebank, we don't have the hard and fast rule that you have to pledge collateral to be eligible for a loan.
Got it.
It's a secondary or a tertiary source of repayment, but there can be other factors that the bank will look at besides collateral.
Cool. Okay. Well, I promised I would turn on mics. So this is the part of the call-in show where people actually get to call in. So I'm going to allow folks to talk, not necessary. We'll keep asking questions, but I do want to give folks the opportunity. So I'm going to allow everyone to talk. And so they're all on with us now. And again, if you're watching this after the fact, and there's like a 10-to-1 of people that watch this after the fact, Melissa, how do people get a hold of you to ask questions?
Sure. Yeah. The best way is email.
Okay.
Melissa@entrebank.com, and entre is just short for entrepreneur. So just chop off the part of the word that's hard to spell, and it's just ENTRE bank.com.
Love it.
Melissa, MELISSA.
Perfect. Okay, great. Well, folks, you're welcome to ask questions. So go ahead and talk if you'd like. Trigby, I see you have your hand raised.
One of the questions that I'd be interested in having you talk about is, as I evaluate businesses and work with businesses, I think there's almost a binary rule as to some people. I suppose I should have thought the question out. When entrepreneurs starting out, whether or not they're taking their salary, it seems to me like half of them do and half of them don't. And I think there's pluses and minuses for both. And so
Sure.
what's your opinion as to the entrepreneurs who take a salary? Is that positive from a banking standpoint or a negative?
That's a great question. And that does come up. And so the biggest thing that banks look at is so when it comes to the capacity question, and that is where the cash flow is part of. If the business is able to make its loan payments based on historical and projected or just projected financials, the underwriters, the banker will look at the expenses and make sure that, first of all, not behind on payroll taxes and insurance and other factors. And then also, if the business isn't paying a salary and the owner has a debt to worth, or whoever is not getting a salary, if their debt to income is out of whack, and it's clear that they're going to be struggling to make their personal living expenses and debt and other things on the personal side, then the underwriter will just put in a salary and take it out of the business income anyway, to make sure that it's holistically supported. And so sometimes the owners so we've had situations, or I've had situations, where people that are going to be buying a business or starting a business, they have sort of a nest egg of cash available to them to not pay themselves a salary for a time period. And so that gets factored in, is that, okay, they've got whatever it may be, 6 months, 2 years, 3 years worth of personal living expenses saved up. So then the business doesn't have to take a haircut on the salary for those folks. But if it's clear that the business needs to pay the owner a salary for the owner to make its obligations, then you might as well just pay the owner the salary, because you're not fooling anyone by not making those payments, because it's going to have to be there for the owner to be able to survive financially. Does that answer your question, Trigby?
Sure. I wasn't looking for a particular answer as much as good discussion. So
got it.
Oftentimes what I see is people who are looking for more things, and they're looking for help with either their sales or their marketing, and that sometimes they have a certain area of desperation about it. When I asked them about it, I said, well, how are you doing? And the answer is, oh, no, I don't take a salary. And to me, when I had my own business, I always paid myself last, but I always paid myself, because otherwise, what am I doing here? I mean, yes, it's fun to create and it's neat to build things, but for what purpose? Is it, I can do woodworking in my garage to fulfill my creative outlet, but on the from a business standpoint, I'm doing this because I want to grow something and build something and make money. So the converse of that, of course, is that, obviously, if you have to run lean, you have to run lean, but you're growing the business value, that because then, the business has a certain amount of worth. And as you said, if you have the nest egg where you don't have to pay yourself a salary, it's a nice luxury, but that's always been sort of a chicken and an egg thing as I work with entrepreneurs, is they passionately believe one or the other.
Right. Well, and that's probably one of the biggest drawbacks of bootstrapping, right? Because if you're going to bootstrap, you probably aren't going to be able to pay yourself for a while. And if you need to pay yourself in order to survive, then you have a really expensive hobby. You don't have a business.
Mhm.
So Molly actually just commented in. She said, I never understood that I don't pay myself a salary thing. You know, how do you pay your bills if you're an owner and if you don't have something? Well, exactly what Melissa started with here. You know, that's when you should be looking at financing. If you've got a business plan, if you've got something that you believe in, if you're willing to stake your life on this, which is what you're doing, you should probably find a way to make that work. And yeah, if you've got to pay yourself between now and then, between now and profitability, you're going to need a financing partner.
Mhm.
Wow. Excellent. This is just kind of a general question, and I'm backpedaling a little bit here because it's been a little bit of a weird couple of years, right? And Melissa, I know EntreBank is only officially a few months old, but you have to be dealing with some of the fallout from COVID and people dealing with, you know, how am I paying back the PPP things that weren't reimbursed, or what was the one that you could take a loan?
The idle. Yeah.
Idle loans,
Mhm.
right? So all of a sudden we're kind of in that frame now where people that took big loans are going to have to start paying back, right? So how does that factor in here, and how is that working in your world?
Yeah, it's interesting because the PPP, if you were able to get full debt forgiveness, I mean, that was just a phenomenal program.
Right.
You know, other folks that weren't able to get the entire loan forgiven, it still was a great program. But yeah, just
Right.
navigating that repayment, and each bank sort of has its own way of dealing with that, whether they're keeping with the government program or trying to shift the loan into some other conventional piece at the bank. And then I've seen folks that qualified for the idle loan, got the money, and they're just sitting on it. You know, they just put it in an account and they don't know if they'll need it or not need it. And so yeah, it has been a really interesting time. And obviously with all this, these extra funds in our monetary space, we are dealing with inflation. And so yeah, it seems like, you know, certainly a time where trying to navigate things as a business owner from a financial perspective is really tricky, especially if now you're going to want to get some sort of conventional loan product. And I mean, keeping track of the interest rate world right now is just been just really difficult. And so yeah, I don't have, you know, a crystal clear answer to that, but it's kind of all over the board. And, you know, some folks got PPP that really needed it, and other businesses got PPP loans and they didn't. And yet, you know, there really wasn't a mechanism to control that. You know, if you qualified for, especially the first round, if you qualified for it, you got it. And so yeah, I think that there will continue to be that aspect navigated here for the years to come.
Well, that's fascinating. And, you know, especially for businesses, that was one of my biggest frustrations, is hearing the anecdotal evidence of businesses that took a PPP loan and then still laid off their people. I was like, no, it's a payroll protection program, people. You know, so, you know, I don't know how they even tried to get around all of that, but I hope there was some reckoning for some of those, because man, that's just awful. So back on questions. I think Trigby had a great one. What's the strangest thing you've ever had to price for collateral? And this is probably in your entire career, right?
Yeah. So I, for the sake of engagement, I wish I could say we've priced some super unique things for collateral, but believe it or not, banks actually don't want to take collateral.
Oh, sure.
We don't want to mess around with it. And so we like things that are very boring and straightforward, and we really don't want your grandma's art collection or your knife
Sure.
supply or
Right.
your fishing boat or anything else as collateral that is sentimental or whatever.
Right.
No matter how much value it is. So
Mhm.
I will just, as I'm talking out loud, because I obviously wasn't prepared for that question, I'm thinking
No
about something that is interesting, but it pertained to the gentleman's business operation. Is I finance a company that does large balers to
Oh, sure.
compact the
Yeah.
recycling.
Mhm.
So those pieces of equipment were really interesting to me because they could take, this massive, think of like, your garage
Mhm.
size, double stall garage size worth of, for example, recycled or plastic that could be recycled,
Mhm.
and they could compact it down
Mhm.
into a tiny little canister. Think of like, the little canister you wheel out to the end of your driveway. These massive balers, and they would be between $350,000 to $800,000 for these
Wow.
balers, and to just kind of watch them in action. They're really cool pieces of equipment. But
Neat.
in general, yeah, we don't want to take unique pieces
Yeah.
of collateral and try to evaluate them.
Mhm.
We just
Mhm.
like really straightforward items that apply to business. But I've certainly had a lot of things offered as collateral, like jewelry is a common one, and yeah, we just don't want to price it, don't want to deal with it, don't want to.
Well, and Molly's disappointed because she was just gathering the details on her Beanie Baby collection. This is not going to work.
Sorry to let you down, Molly.
Excellent. A big group inside of Voyager Use community are CFOs, right? Fractional CFOs that work for 2 or 3 other companies and are kind of filling that big need. What would you hope that a CFO is ready for if they're looking for funding?
Yeah, I would say I would hope the CFO is ready for questions as it relates to trends in the business. So one of the big things that we as bankers like to do is, especially now we're talking about businesses in existence, not startups, is look at your last 3, maybe 5 if we're lucky, years, and kind of do some trending to say, what are your margins, cost of goods sold, what's your net operating margin, what is different expenses, and as a percentage of sales, how have those gone up and down? What are the trends? What are the expectations? Are things trending positively or negatively, and why? And just being able to answer that and articulate that. And usually our clients can, but every once in a while, we'll notice a trend and bring it up, and they'll look at it like, I don't know why our inventory keeps going up as a percentage. I don't know what. And it's like, wow, you want to apply for financing and get this loan, and yet you don't understand these pieces of your financial picture. It just doesn't give us a lot of faith in their ability to, stay on top of things. So I would just say, understanding the trends within your own business financial history. And then if you really want to impress the banker, to understand how you are relative to your competition. So if you can understand your peers and or the industry and how you trend positively or negatively to that, and be able to explain that, that's super helpful to the banker, and puts a really big sign of hope and faith from the banker's perspective in the company's ability.
Sure. And I think one of the big things that would hopefully engender that trust is to have a CFO. Right?
Big time.
If it's a business owner just coming to you and like, I don't know, I got this box of receipts, does that help? That's probably not as good of a sales pitch for funding as having somebody that knows what they're talking about, right?
100%. Yes. And I've worked with a lot of CFOs that are extremely impressive. They just have the numbers dialed in, they know the ratios, they know what's contributing positively or negatively, and it's wonderful.
Mhm. Wow, that's excellent. Another question for you, Melissa. So you're starting a new business from scratch. What are 3 relationships or things that you'd solidify to make sure that that business can be successful?
Starting a business from scratch.
What do you need to be successful?
Yeah, that's a great question. We could spend, the rest of the day on this topic. There's so many things. Speaking specifically from the banking lens, I would say that, yeah, just being well capitalized, making sure that when you run your projections, if you have a 10 to 20% less sales than you project, and you have a 15 to 25% increase in expenses, are you still going to be able to survive? What does
Right.
that look like on your business? Have you factored in those pieces?
Mhm.
So oftentimes having a line of credit available and or access to liquidity, it doesn't have to be a business line of credit. It could be a home equity loan or something to support the business, but just making sure that the capitalization plan is clear. You probably have a couple other items to add, Dave.
Yeah, well,
banking.
Molly said, of course, you should probably have an accountant or at least a CPA, right? So somebody to keep it set, unless that's what you're good at. Certainly in my case, that wasn't. I'm not a numbers guy, so I needed to find that right away. For me, another thing that I would, of course, look at is a business plan, right? So planning out, how am I going to actually make this a business that makes me money? And that's the entire point of a business, right? So, if and I'm sure Trivia can come in and give us some nice colorful examples of people that we've worked with over the years, but there are a lot of things that people think are businesses just kind of because they're either they thought of it in the middle of the night one time and like, oh my gosh, this is awesome, or that it's something that they've got a passion for, but it's not necessarily monetizable, right? And so, business plan, numbers in order for me. And if I had to come up with a third one, probably a way to make sure that it wasn't all me, right? So, and this is a little bit tricky for fractionals because a lot of times it's just one person running a business, right? But for most businesses, you want to make sure that you can take a vacation without your revenue drying up.
That's a great point, Dave.
Yeah. So Molly added succession plan, right? So what do I want to do at the end of this? It's probably not even a succession, but just what's the point of this business, right? So some people have the need to, or just want to have a lifestyle business. And some folks want to build something to sell it and, make something out of that. Are you seeing a lot more folks that are tipping in one direction or the other versus lifestyle versus like investment?
Oh, wow. That's a great question. Yes. Now that I think about that, I am seeing folks getting into more lifestyle businesses. And I would say the conversations I've been having with people lately that have started or what started what they wanted to be a lifestyle business are now having those decisions of like, okay, this business is scalable.
Yeah.
Now the question is, do I want to scale it?
Right.
What does that mean for me and my bandwidth? And now I have to hire people if I want to scale. And do I want to do that? And so the conversations I've been having with folks lately have actually been around that piece of, I thought this was going to be a lifestyle business. Turns out there's something here to scale, but that means that I need to not do it all myself. And so those are big decisions for people. And of course I don't have the answer because that's really, up to them, but it's just, it's good to talk through that.
Yeah. Well,
the other thing to what Trigby, sorry to backpedal, Dave, but I was just thinking about Trigby's questions to solidify. As you were talking, the other thing that came to mind for me and I do see lacking oftentimes, it came to mind when you said business plan, is in that business plan, having a really robust marketing strategy. I think sometimes people with a great idea think that business will just come, and oftentimes they do get some business,
Right.
but they haven't really thought through all the marketing requirements and planning and different things that come into play. And the marketing world is evolving rapidly, just like technology.
Right.
And so what they thought might work a year and a half ago, just being able to shift to where their demand maybe generated from. I feel like that's another really, again, we could spend a lot of time talking about that, but I feel like marketing is a critical aspect as well.
It really is. And, thank you, because of course I know brilliant people that can help with marketing. But the thing that we often see, especially with brand new businesses, is they'll just grab a calculator and they'll start hammering away at numbers like, okay, so I wanna have a pastry shop, and okay, on a quick Google, it looks like $7 billion are spent on pastries every year. All I need is 1%, and that's $70 million or whatever, right? It's like, so within 3 years, I should be able to be selling, 45,000 Dunkin' Donut, whatever's. And it's like, no, that's not how this works. You actually need to create interest in the market.
Yes.
So
I've seen that too. I only need to capture 0.05% of the market, and I can
yay.
cover all my expenses.
But hey, how are you going to do that? Yeah.
Yes. No, that's hilarious.
Excellent. Boy, this is super, super fun. General question, and taking a half step back. What do you wish you could tell a entrepreneur before they even started thinking about making their business a reality? Like, is there something that, like, just to either keep them going and to keep them energized through the process of all the numbers and things that have to go in, or to maybe warn them off because they're probably not really ready if they're just hammering away on a computer or on a calculator?
Great question. I didn't have that question ahead of time either, but off the top of my head, what comes to mind, Dave, and this is super fun, by the way, is likewise, to have a peer group, peer group of entrepreneurs. And we know in the Twin Cities and beyond that there's all kinds of options. I know I'm in a few already, but joining a peer group where you can bounce ideas off of, you can learn from, of course, you can provide your insight to them in their business as well.
Yep.
But I've been in peer groups the last 10 years or so, different types. Of course, they're all different options. I feel like having a group, and whether that's CEOs or presidents or just leaders, to talk through and to get that peer guidance is invaluable.
To compound on that, I think it doesn't have to be peers in your direct business, because I think,
in fact, it's more helpful sometimes to be in different industries.
And what a great way to get access to big thinking and to help you expand your business, then to be exposed to multi perspectives. Like, I think probably some of the best business growth advice I ever received was in a CEO group that I was part of, from the guy that was running one of the biggest van lines or bus lines in the state. Right? So he was the CEO of one of the big bus companies that you see people driving people over all over the place. And that fella had the EOS/traction down to an absolute just perfection. And he gave us all kinds of spreadsheets and things that we could reuse and rebuild, and all the stuff that he had done in the trenches. And it was just super, super helpful.
Oh, that's awesome. I have chills with you saying that, because that's some of the best advice I've got from my women's president organization, and now Coalition 9. And yes, those peers have just been
right.
phenomenal.
Molly mentioned WeMN.org, Women Entrepreneurs in Minnesota.
That's another good one.
Yeah. So and part of the benefit of having people that are in multidisciplines other than, broad spectrum is that you're not really competing. So you can share a little bit more than you would. I'm never going
Great
to
point.
buy a bus company. So he was happy to give me all kinds of information on how he made his business successful.
Yes,
Oh,
that's a great point.
cool.
Mhm.
I want to open it up for folks that are on. Molly, if you have questions that you'd like to lob in via voice, by all means. And of course, Trigvi as well. There's so much here. And what I love about these office hours is it really gives you a chance to ask the questions that maybe you were afraid to ask and that you haven't before. So if there's things like that, if you'd like to chat them, of course, or not, would love to hear from you.
I think when I started my own business years and years ago, the thing that I didn't realize is that, and I tell people, if you have a passion for something, that's great that you have a passion for it, because that absolutely needs to carry through in your business.
Mhm.
But as a business owner, that's not necessarily what you're going to be spending all your time on. And you're going to be spending the majority of your day dealing with money, either asking people for it or demanding it after you've done something for them. And so the earlier you can get in on having a good concept of your financial numbers, having a relationship with somebody who can explain, what a P&L means, can accurately and consistently tell you what EBITDA stands for. I always get tripped up on the D. I usually get the first 4 right. Things like that, where will help you, is really, to me, the cornerstone of growth in any business, is to, and I'm blessed in that in my current position, I don't really have to worry about the financial minutia. I just try and make the pile bigger. But for those people who really want to have peace of mind, and then to be able to go to Melissa and get a loan, having good control and understanding of what your numbers are will, more importantly than getting a loan from Melissa, will just simply help you sleep better at night.
Mhm.
Thank you, Trigvi. Yeah, those are really great points about the financials and the numbers.
Yeah, well, I think this is probably something that you say a lot, Melissa, when you're talking to people and networking and stuff, but you don't have to have a specific need to talk to a banker. I mean,
Right.
you should probably be talking to someone and have a great relationship with a local bank well before you actually need financing, right? So
Absolutely.
super important to just have somebody that you can bounce things off of. One of the things that we tapped on earlier, but we didn't really dig in much, that I was super confused with when I was just getting started, is SBA. And can you talk just a little bit about what the difference is between an SBA loan and a conventional loan?
Sure. Yeah, absolutely. So I think I mentioned it briefly that SBA backed loans can make it easier for small businesses to qualify for financing and to get the funding on terms that wouldn't necessarily be available to them from conventional financing. And SBA means Small Business Administration. And I have to say that the government has done a really nice job with that program. And a lot of banks have developed some really good processes to be able to facilitate SBA loans. Some banks kind of limp along with them, but there are some banks that really have brought that into focus. And so, especially, I think I mentioned for service-based businesses, especially for businesses that don't have collateral to pledge, the SBA can be a really good fit. A couple of the differences. So some of the positives are oftentimes banks will allow for a longer repayment period. So in a situation where they may normally want it to be repaid in 5 years, they may be willing to extend out to 7 or 10 years because of that guarantee from the government. Also, the banks are limited to what interest rates they can charge. So there's caps on the interest rates. Also, as long as the owner keeps making payments on the SBA loan, the bank can't call the loan, it can't become due. So for example, even during the recession, a bank I was working at, a company that had a loan went out of business, like literally closed its doors. And they kept making their payments on the loan. So where some banks may say, oh, the business went out of business, the loan needs to be repaid and give it a certain time period to get that repaid. If the borrower's in an SBA program and they keep making payments, the loan will stay, the bank can't expedite the payments as long as they're being made on time. And so there are some sort of protections in place when borrowers are in the SBA program. On the disadvantage side, what steers people away from them sometimes is there are a bit more fees. So the borrowers will pay a fee based on the guaranteed portion of the loan. And so if the loan, as the loan size gets bigger, of course, the fees seem bigger as well. And so that can be sort of a weighing aspect of trying to decide what type of loan to do. The other thing, although it's gotten a lot better because banks again have learned how to streamline, sometimes the paperwork part of it can feel a bit daunting. Folks don't want to do an SBA loan because they heard it's going to be a lot more paperwork. The reality is, if you've done a mortgage on your home, it's going to be less paperwork than that. And if you survive that, you can survive an SBA loan. As long as you're not a felon, some sort of criminal, if you have a rap sheet, it's a little tricky to get a government guaranteed loan. But if you've been a abiding citizen, there are some really good programs available.
Excellent. Are there any common misconceptions that you'd like to set the record straight on for banking or the kind of banking that you do?
Good question. Common misconceptions, I'll put a pin in that. One thing I want to mention is folks a lot of times think that they can get 100% financing for anything and everything. And it's really difficult. The regulators have made it difficult for us to do 100% financing. Occasionally we can offer that on brand new equipment or vehicle loans, those types of things. But in general, banks really want there to be some skin in the game, some equity, some typically cash being contributed to any sort of item that's getting financed. And I know sometimes the expectations going into it from the borrower standpoint, they'll say, okay, I want to buy, this business and I need money for marketing and labor and for build out. Here's a total cost. And I'd like to get a loan. It's like, okay, well, how much cash are you putting in? Well, I want to finance it all. Well, so do you have some equity from somewhere else that you want to pledge, or what is your contribution to this project? And they say, well, I mean, it's such a good deal. Like, why can't you just finance all of it? And so I think just talking through that, and of course I'm sensitive to it because yes, oftentimes there are really phenomenal projects and opportunities, and it does look like on paper that the business should be able to qualify for 100% financing. I mean, it's like, wow, I totally believe in what they're doing in this project or this business, whatever it may be. The reality is it's just not prudent lending to provide 100% financing. It's just not, it's not a good way to be a good financial partner. It is a good discipline to contribute something to what you're trying to accomplish. Again, some skin in the game. So I don't know if that's a misconception, but it's maybe just an expectation misalignment at times.
Love that.
Yeah, other misconceptions, I think Trigby kind of was his question kind of geared me towards one where, well, I know the bank just wants to take my collateral. And it's like, No, we absolutely want nothing to do with whatever you're pledging.
Right.
Like, we just want you to pay back your loan with a little interest. Like,
Right.
please don't make me take your whatever, your
Right.
house or your
Right.
property or your car, or
Uh-huh.
like, we absolutely do not want it. I mean, it's such a, I've been at banks where we were left with no option but to liquidate
Mhm.
because the borrower evaporated, or we were in a program where if we wouldn't, we would lose part of something or get fined, and so we'd have to liquidate. And it is such a hassle to try to, find the piece, to deal with it, to sell it, to whatever.
Mhm.
So I think
I wasn't asking the question to try and make you look bad, Melissa. When I had my own business, I once did a website and trade for a vintage Miss Pac-Man machine.
that
And
sounds like something you would do, Trig.
my accountant told me that I had to evaluate it and pay tax and set aside additional money for taxes on it. So that's what I was asking, is just for an entertaining story.
That's hilarious. Yeah.
I don't do that anymore.
Okay, that's funny. No, I just think that your question sort of led me to think about the fact that sometimes people also think about that, or I've heard people say that, well, the bank just wanted to get my property. And it's like, no.
Well, the purpose of collateral is not to get your stuff, because then a lot more people would get loans and banks would have a lot more stuff. The purpose of the collateral is mitigation of risk on the bank's side.
Thank you for saying that.
The purpose of asking for collateral is the bank's just hedging their bets. It's like the come line in craps. What they're trying to do is say, okay, I'm going to give you this money and you're going to give me some of it, my money back, plus a little more in exchange for it. But if that doesn't happen, then I'm going to take Granny's baler.
Yeah.
Right.
Yeah.
But that's not the bank's first option by any means.
Right.
Yep, 100%. Thank you. I think the other misconception maybe, and we work in a phenomenal business community here in the Twin Cities where people really have good business acumen. Occasionally, well, I shouldn't say occasionally, more often than I'd like, people will request a business loan and then not want to personally guarantee it.
Mhm.
That's also problematic. And I used to feel very strongly about the fact that, hey, if you don't want to personally guarantee your business loan, if you don't believe in your business, why should I?
Right.
And I've gotten beyond that, because I know that sometimes when there's multiple partners involved, especially on real estate deals, it can be more of like, well, what's equitable if this gentleman has deep pockets and this one is very light, he doesn't want to guarantee 100% of the loan when, so I've gotten past that. But there are still expectations out there where people just don't want to guarantee their business debt. And that's hard for banks to talk through, work through. There are options for cute guarantee agreements. It's not our favorite thing to deal with. And frankly, the regulators expect banks to have personal guarantees. So we catch a lot of grief when we are trying to set up deals without guarantees.
Right. Well, and I think that's probably a point worth making. And we're getting close to the end here, but you're not just running your bank. You didn't just get a whole bunch of folks to give you a whole bunch of money and then you're running your own thing. You have regulators that you have to work with. I mean, this is a business that is operated with real rules and people check on you. So it's not like you have free reign to do whatever you want.
Correct. Yes. I'm not an individual lender. I'm a FDIC insured bank.
Right. Amazing.
Yes.
We have just a couple minutes left. Melissa, is there anything that you want to make sure everyone watching knows? And certainly what can they do to keep up with you and to connect afterward? In addition to sending an email to melissa@entrebank.com.
Yeah, I would just say that if you are looking at a bank and a banking partner, I would say it's really important to understand who you're going to be working with at the bank on a daily basis. Oftentimes, or sometimes I should say, Banks have different folks sort of operating on the business development side, but then they evaporate after the loan closes or you get your account open, and then you're trying to take advantage of an opportunity, or your business hits a challenge and you can't find the person that you shared everything about your business and your goals to, and now you're working with a team or a 1-800 number. So I would just say that as you are developing a banking relationship, it's really important to understand who you're going to be working with at the bank on a day-to-day basis. With that, it can be helpful to know how often folks turn over at the bank. I know that's a major pain point for folks that I talk to when their banker changes every 18 months and they're kind of having to explain everything again, and they don't really feel like their banker is really a good resource for them because the person's changing all the time and doesn't really understand how they do business. So I would just say to be thoughtful about who you're choosing as a bank and a banker from that relationship standpoint.
Absolutely. And I was at a big bank before, one of the biggest 5 in the world or the country. And that was a constant complaint and something that we did all the time, right? Because you've got a constant churn of people that are just coming in and coming out. And that's one of the big benefits of working with a small organization that has people that have staked their lives to this business. You need to get a hold of Melissa. You're going to be able to get a hold of Melissa, whether it's 2 years or 5 years from now. So
Correct.
that's super, super cool. Well, Melissa, thank you so much for the time. And this has been an amazing conversation. Like I said before we started, I was like, it's always pretty surprising what pops up in these chats.
Yeah,
So
I've had a lot of
sharing.
fun.
Yeah.
Yes, thank you, Dave.
For folks that are on and watching the recording, next week we have Josh Tan coming up. He has a business where he lines up and sets up processes for businesses. So Josh is actually going to talk about how to set up building systems and processes to get your free time back. So if you're interested in that, be sure to sign up and dial in at that time. Until next time, Melissa, thank you very much. Again, you can get a hold of Melissa at entrebank.com, ENTRE bank.com, and Melissa at with 1 L and 2 S's. So thank you, Melissa. Have a wonderful day. And thanks to all of our folks that are here at Office Hours. We'll see you next time.
Excellent. Thanks, Dave.
Thank you.